In the world of finance, the actions of the Federal Reserve are always closely watched, and their recent moves have been no exception. At their previous meeting, as we discussed in our previous DITM, there was a subtle shift in wording that hinted that the Fed might be approaching the end of its interest rate hikes. Now, in the latest FOMC meeting, the Fed has continued its campaign against inflation by raising the key interest rate by 25 basis points, bringing rates to a 16-year high. In the past year alone, rates have been hiked by 500 basis points, and this makes it the steepest hike since 1980. Now, we see that the Fed has continued with its journey in combating inflation. Now, while US inflation has dropped to 5% in March since hitting a peak of 9.1% in June, it still remains about 2% of the Fed's inflation target. Now, when the central banks such as the Fed raises rates, it effectively makes it more expensive for banks to borrow money. Because of that, lenders have to charge higher interest rates on credit cards, mortgages, and loans. Now, the Fed does this because it wants Americans to spend less money. And when it's more expensive to borrow money, Americans tend to spend less. Now, but with inflation easing and a mini banking crisis in the mix, the big question on everyone's mind is whether the Fed will raise interest rates again. From our understanding of the Fed chair's speech, they haven't made a firm decision on the pause rate hike yet. But the Fed is prepared to adjust their stance if risks emerge. Now, they'll be taking a data-dependent approach to determine the best rate decisions going forward. India's coal production has been growing at an impressive rate of 23% over the past 5 years, making it a vital source of energy for our economy. Now, coal has a variety of uses, from powering electricity generation to steel production to cement manufacturing, all critical components for infrastructure projects. Of course, it does have environmental cost, and we will come to that later. Now, India has made big strides in ramping up production through its center-owned companies, registering a growth of 22.6% in the last 5 years, hitting 893 million tons in fiscal year 23. Now, the Ministry of Coal has now set an ambitious target of 1 billion metric tons of coal production under the action plan of fiscal year 24, along with a capex target of Rs 21,030 crore. Now, India's quickly developing economy and growing electricity consumption is leading to a rising coal demand. Now, the government is putting in place a number of policies to boost domestic output to increase self-reliance in the face of rising coal imports. And this surge in domestic production is expected to bring about a host of economic benefits. Having said that, coal-based power plants are a significant contributor to air pollution and greenhouse gas emissions. Now, India's reliance on coal as a source of energy is understandable given the country's rapidly growing economy and energy demands. However, it is important that India takes a balanced approach to energy production that takes into account environmental concerns, especially with its aim to achieve net zero emissions by 2070. So what does this news mean for you? The pace of interest rate hike has eased after signs of inflation slowing. However, the interest rate has been hiked by 500 basis points in the last year and has been the steepest hike since 1980. This is bound to impact the US economy with some spillover effect seen in India too. However, the impact on the Indian economy will depend on the variety of factors, including the strength of the Indian economy itself, as well as the policies of the Indian government and RBI. This will have an indirect neutral impact on you. The government's measures to boost domestic coal production is expected to reduce reliance on imported coal and result in foreign exchange savings too. This will have an indirect positive impact on you. While I say this is me, Merlin Sedana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.